Alrighty, what is going on, everybody? Welcome back to another quick CYPRX fundamental video breakdown. Always keeping you guys in the loop with the realest information and what to be paying attention to ahead of the curve. So last week, going over a real quick recap, we witnessed a notable strengthening of the US dollar alongside a prevailing risk-off sentiment in the market, which here at CYPRX we were attempting to warn you all could potentially take place. If you're not following us on X and you're not paying attention to the video content that we're providing on YouTube, make sure that you're following us so that way you all can pay attention and follow along to these crucial updates that deliver market sentiment on a daily and weekly basis. Last week, the Consumer Price Index, or the CPI report on Tuesday, surpassed expectations, with headline inflation hitting 3.2% and core inflation reaching 3.8%, prompting a sell-off in bonds as investors adjusted their future rate cut projections. Additionally, the Producer Price Index, or the PPI, for February showcased a significant increase in inflationary pressures, surpassing economist forecasts and further impacting investor sentiment. That all took place last week. Now, we also had encouraging data from the U.S. Department of Labor regarding initial jobless claims as well on Thursday last week, which offered a positive outlook for the U.S. economy, with only 209,000 claims filed by the week ending in March 9th. While this typically boosts confidence in the U.S. economy, it simultaneously dampened enthusiasm for risk assets, including cryptocurrencies. So all of these metrics and factors weighed on the price of digital assets last week, where we saw Bitcoin top out at around $73,000, dipping all the way down to about $65,000 and slightly recovering over the past 24 hours. Now, this week's focus, what are we going to be paying attention to? Our focus will shift towards major central banks' monetary policy decisions. As of right now, the market forecasts that the Federal Reserve will maintain interest rates primarily due to the recent inflation still showing moderate increases, failing to meet the Federal Reserve's target of 2%. With this in mind, for a risk-off sentiment, we will primarily be focused on the dollar strength and the Federal Reserve's tone surrounding monetary policy this week. Any hawkish comments further bolstering the narrative against rate cuts, thus driving dollar strength, could potentially weigh further on risk assets, so be paying attention to that. Traders also need to be reactive to any major changes in rates, such as a potential surprise hike by the Federal Reserve, which obviously, of course, I personally believe is highly unlikely, but still a possibility that warrants everybody's attention in case we need to react swiftly. A more favorable outcome, so this would be the most bullish case scenario this week in risk assets like crypto. A more favorable scenario, which in my personal opinion is the less likely scenario this week, would be a dovish to neutral tone from the Federal Reserve, putting further downside pressure on the US dollar and supporting bullish momentum in risk assets by further prompting the whole entire rate cut narrative. Let's maintain this week a reactive approach, control our emotions, and stick to our trading plans. Make any necessary adjustments as the data this week unfolds. With that being said, if you guys enjoyed this quick video breakdown, do us a favor, smash that thumbs up button. Make sure that you're following us across all of our social media platforms so that way you stay up to date with this information throughout the entirety of the week when we release these fundamental breakdowns. If you guys want direct access to my fundamental and technical analysis, then make sure that you guys head over to CYPRXtrading.com. We'd love to have you on the team. Many blessings to you guys. Keep your head up out there, and I will see you all in the next quick video breakdown.